What's going on, and welcome back to another episode of The Mortgage Mindset. I'm your host, Trevor Otsuka. I'm a licensed mortgage advisor with Barrett Financial Group, and I lend on commercial, residential, private money for fix and flip, things like that. So I want to welcome you back. Thank you for sharing your time with me and tuning in on this week's episode. We're going to dive right in here with the market update for rates. So rates are definitely climbing back up. We were under 7% for the entire last week. And then with the Fed rate decision that happened yesterday, which was Wednesday, December the 18th, today is Thursday, December 19th, Fed actually made a Fed funds rate cut of a quarter of a point, but the bond market did not react favorably to it, largely in part due to what we call the dot plot or the projections of where all of the Fed chairs believe that the federal funds rate is going to land over the course of the next 3 years, which we'll dive into. I got a pretty interesting article that we'll cover on that. So for rates today, 30-year fixed conventional, you're looking at 7.14% on a national average. 15-year fixed is at 6.45. 30-year jumbo at a crispy 7.30%. And then FHA and VA are right around 6.5, 6.5. For econ data, really the biggest thing is what we talked about just now, which was the federal funds interest rate decision. It marks the third interest rate cut of the year. First one occurred in September, and we'll discuss a little bit more about the FOMC economic projections for the next 3 years. On Friday, we have core PCE, and then next week, kind of interesting because you have Christmas and Christmas Eve. Christmas Eve will be a half day for the market, and that's going to close at 11 a.m. Pacific Standard Time. And then Wednesday, obviously closed for Christmas. And then the day after that, the day after Christmas, you have jobless claims for really probably the biggest item of the week. We're going to dive in here to the news article. So this is going to be from Housing Wire. The link for this will be included in the podcast description and the YouTube description below. And here is the title. It says Fed cuts rates by 25 basis points, which is also known as 0.25%, signals a slower pace ahead. Okay, so here are the key highlights from this particular article. So we have Federal Reserve's third consecutive rate cut and future path. The Fed reduced its benchmark interest rate by 25 basis points or a quarter of a percent, marking the third consecutive cut this year, bringing the target range to 4.25 to 5.5. Federal Chair Jerome Powell emphasized a cautious approach moving forward, comparing the uncertainty to quote unquote driving on a foggy night, signaling slower and fewer cuts in 2025. So, this is one of the reasons why the bond market and treasury yields did not react favorably yesterday to the federal funds rate cut of a quarter of a point, is because immediately after that, they had a federal chair press conference where Jerome Powell got up there and had what we would consider a hawkish viewpoint on the market moving forward. Okay, so you have dovish and you have hawkish. Dovish means that they're very optimistic about the future of the market. Hawkish is the opposite of that, where they have some concerns about some of the things that are happening. Originally, they had planned for 4 federal fund rate cuts in 2025, but based on what he said at the federal presser yesterday, it looks like they're really only going to be planning on 2, which will be half the amount of rate cuts that were originally projected to be on the table for next year. It says the current forecast indicates a gradual decline in rates, with the federal funds rate expected to end 2025 at 3.9%, lower than prior projections. There's also some information in the article about inflation trends and their implications. It says inflation remains elevated, but is steadily cooling, with headline inflation at 2.7% year over year in November, while core inflation sits at 3.3%. Shelter costs continue to be a major driver, comprising 45% of inflation, though monthly increases are slowing, 0.3% in November, down from 0.4% in October. Persistent inflation is pressuring mortgage rates, keeping them in the mid to high 6 range, with gradual easing expected to bring them down slightly in 2025. Housing market and mortgage implications. It says the Fed's slow rate cut trajectory means borrowing costs will remain higher for longer, prolonging housing market stagnation as many homeowners are locked in to favorable rates. Economists expect a slight revitalization of the housing market in 2025 as mortgage rates are predicted to dip into the mid to low 6% range, which could improve affordability. Mortgage originators may see higher volumes in 2025 with nearly $2 trillion in outstanding mortgages that are above 6% for their interest rates, creating refinance opportunities as the rates decline. So, curious to know your thoughts on this. Another thing that I read, which wasn't included in this article, the really big question mark right now, which has people nervous, especially traders in the market, is President elect Donald Trump's economic policy. So he is scheduled to take office on January 20th, but there's big question marks about the tariffs that he's talking about. They don't know what countries he's going to put tariffs on. We have no idea what the size of the tariffs are going to be, and we don't know what that's going to do to the inflation indicators for these reports that are released every single month. And that's really what's going to be driving mortgage interest rates moving forward into next year. Personally, I think, just like any business plan, it's probably going to take about 90 days or so after he takes office to really see if any of the things that he's doing are going to be making an impact in the market. It takes about 90 days really for any business plan. So personally, I plan to give him the 90 days before I make a judgment on really what's going to be happening with his econ policy. He's got a lot of proposals that are going down. So that's going to do it for this week's episode of The Mortgage Mindset. I appreciate you guys. Thank you so much for tuning in, and I will see you next week. Bye-bye.